Take it from the top. Down. Double shitters. Shitters.
I will be talking about how to start your business in a foreign market, how to scale internationally. But before I do that, I just wanted to do a quick test to see who we have in the audience. So raise your hand if you have your own company. Okay, that's pretty much it. Leave your hand up if you have more than 10 people employed in the company. Okay, cool. Now, raise your hand if you would like to have an international business that makes a lot of money. Cool. Now, raise your hand if you want to spend your life in stress, losing money, and living in shitty hotels and airports. All right. So that's the paradox number one. Those things come into a package. They don't come separately. And I'll explain why and how it works. But before I do that, let me just jump into my CV. I'll go through kind of my background so I understand who I am as an entrepreneur, because people make money in different ways, and I'll just explain, how my background looks like. Finished the school, Rigas Valsts Gymnasium. I don't know if you know it, the math school in Latvia, focused on mathematics, etc. Then I went to UK, studied there business studies, finance, things like that. Kind of enjoyed it, but it was pretty difficult in the meantime. And then I thought I'm going to be this superstar, hotshot investment banker. So I joined JP Morgan. There I spent about a year. I understood that this is not really my thing. So before they kind of managed to fire me, I stepped away myself. I dropped out and I started my own company. So that first company was Cream Finance. What I usually would say, what we do is we provide consumer loans over the internet, starting from anywhere from a couple €100 for a few weeks, all the way to 20, 30, 40,000 euros for up to 5 years, right? Consumer loans, yes? Basically like a bank, but the difference is I don't take deposits. That was the first business. Started it in 2012 with my friend, now my co-founder, Davis. We sold it just recently, actually, effectively 10, 12 years after we had started it. We sold it for over 50 million euros. It's been in the news as well. The business is doing this year about 150 million in revenue, right? So it's not transaction volume, it's the actual revenue that we generate from clients. It's profitable, employs about 500 people, and so on and so forth. I'll talk about the other companies that I've started, but altogether I wanted to say that I've started businesses in about 13 different countries. Yeah? Latvia was the first one, then Czech Republic, I'll talk about that, and then all over Europe in crazy places like New Zealand, Mexico, Georgia, Saudi Arabia, Jordan, and so on and so forth. We employ about 1,000 people across these different companies, so that's a sizable number across quite a lot of jurisdictions over this 10, 15-year kind of career. So everything I'll be sharing, it comes from my own experience, it comes from something I lived through, analyzed, understood for myself. It's not coming from seminars, etc. This is the stuff I've paid, with my own money, blood and sweat and tears and so on. So since 2020, I've stepped down from Cream Finance, so I no longer I am a CEO in any of the businesses that I've started now. I am basically a company builder. So what I do is I help kind of come up with ideas within the fintech lending space. I hire a CEO, I give them shares, I invest seed capital, and then I give a bit of debt financing as well. And then together with these different CEOs across the different businesses, we try to scale them, right? So I would say I'm a company builder, there's this terminology, serial entrepreneur, but generally I just, I like starting companies and scaling them. A few of the businesses that I've started in the last 3-4 years, Money.jo, it's the biggest non-bank lender in Jordan. Do you know even a country like Jordan? Do you know where it is? Yeah. Close to the war zone now. So we are doing close to 50 million in sales this year. Esketit, it's one of the biggest or fourth largest loans marketplace. So you probably have heard of a company like Mintos. So it's in a similar thing. You invest money on this platform and the money goes to lending companies. So we have 20,000 investors there. New School, it's a lending and technology group that we're focusing on in Saudi Arabia, trying to get a lending license there, as well as Mexico and some other markets. FU Capital, that's a bit of an off tangent. My business partner is very focused on that, so we're trying to combine crypto investors who have Bitcoin and stablecoin and things like that, and make it available for them to invest into the consumer lending companies, right? So we're kind of trying to combine crypto with the regular Web 2 businesses. So, and in fancy words, it's called asset tokenization. And the last one, Spanda Capital. So this is where we invest and buy portfolios of loans consumer loans and different types of loans from banks and non-banks in Spain, right? So I'm sticking with the fintech, with the lending industry generally, because that's what I know. The last point, most important. So all of this is just a hobby, as I like to say. I'm a YouTuber with almost 2,000 followers. Every time I do a presentation, I hope my numbers are going to go up. So after this event, I'm expecting, at least 5. That's my benchmark. All right, that's just a bullshit illustration of my past. I looked young. This was my actual trading desk in JP Morgan in London, on the trading floor. A bunch of screens, trading stocks, etc., etc. And then I decided it's kind of not for me. And then that next one is, ironically, the next business, which was Screen Finance, which I started with one little laptop. But that was back in the day. That's a long time ago. All right, so let's talk about how to start a business abroad. And I think this topic is kind of meaningful and relevant if you come from a small country. So most of you are from this country, so therefore this question makes sense. If you're from a small country, there's 2 options. Either you do business with the government and you have to steal money effectively, end of the day, or pay bribes, and that's how you can become rich and build a big business. It's possible in one small country. Or you have to go international and eventually, sooner or later, start a business that you're doing in your home country in different countries, right? So that's kind of the path I've chosen. I thought about, the points, kind of lessons, insights from my experience specifically for the topic of scaling internationally. And I will be talking about, fundamentals and general things that give you kind of a mindset approach. I'm not going to be talking about how to set up LinkedIn ads to get some leads for applications for your, first employee. Yeah? That's a lot of detail. We can maybe, if we have time for questions, we can go into that. I want to give kind of an essence, a mindset of how I look at doing business internationally. That's why I listed these different points, different questions. It's a tip of an iceberg, right? But still, let's try to go through each one of them and get some insights. All right, so the first question is, which is very important, is to ask yourself whether you need to, you have to, and can you scale internationally? Should you even go with your business into another country? Because the reason is oftentimes starting a business in a new country, it can be more of a distraction because it's a lot of cost, it's a lot of unknowns and a shift of focus rather than the benefit for your company, right? So the first question is to ask yourself a few things just to get kind of a common sense check as to whether you have the right motivation to go into a new country or to start a business in a foreign market. Because it sounds cool to have an international business, but trust me, you rather have a company that operates in one market and it's easy to run and it spits out cash and it makes profits, etc., etc. It's far more complicated to run a business that is in different cultures, different time zones, and so on and so forth, right? It's not necessarily a place you want to go to. So a few questions to ask. Is your business well established at home? If your business is established, you have profitability, it's growing, you can already maybe take out dividends, and maybe you've reached some kind of even a position in the market, maybe even a ceiling, some kind of a leader position in the market. Of course, in that scenario, it makes sense that you look for other countries and you go into other countries. If, however, you're starting, you're just still figuring things out, of course, it will be a distraction and a difficulty for you to do what you're doing and struggling with in one country and multiply that and start another country, right? Very common sense. That's the first. Second is, do you have resources to scale internationally? Let's say you do want to go into a foreign market. The question is, do you have the money? Where do you get the money? You either get it from your business that already spits out some free cash flow, which is fantastic, but happens super rarely, or it takes a long time to get there. Or you have to raise money from investors. Again, raising money from investors, going into a new country, that's a shift of focus, additional risk, potential cost, etc. I'll talk about that in more detail, but this is another question to ask. Next one, can you introduce more products in your existing home country, your existing business, rather than have that product, that one product you figured out, and copy that across countries? Because businesses are more valuable if they have several streams of income in one country. Ideally, of course, it's a sizable country, rather than they figured out one thing and they're trying to copy it across a number of countries. Yeah? That's a simple thing. And therefore, it is hard to come up with a number of products that make you money. And that's why people are tempted to just figure out one thing and let's just copy that across different countries. And that's exactly what I did. I'm not saying it's wrong. Just think maybe you're in a position with whatever you're doing that there is something else that can make you money without going into new countries. All right, next one is, do you read too much Forbes and TechCrunch? Raise your hand. Nobody's going to admit. Do you read Forbes and TechCrunch? All right, okay, good. Don't do that too much. Reason I put this out there is because the kind of popular mainstream business media is dominated by news titles about VC-funded tech companies, right? The unicorns, how much, who has raised, etc., etc. So it is easy to get a perception that there's nothing else in the business world other than tech companies and VC funding, etc., etc. And most likely, your business is in a different category. For those tech companies, they of course need to go into international markets to justify the valuations. That's the game they're in, right? It's a must. It's not even like should you or should you not, it's a must. If your business is not in that category, that's a big question as to whether you even have to think about foreign markets. And the last point is, again, common sense. Let's say you have an e-commerce. How many of you have got businesses online, effectively, or tech-enabled? The point here is, if you have a tech-enabled, let's say, a simple example, e-commerce, something that sells online, it is obviously simpler to scale, duplicate, replicate in another country. You set up a website, translate to the language, hire a few people, you don't need like some massive capital expenses, and off you go, right? That is a business model that makes sense to think about going abroad. If you have a business that's in construction, in real estate, I don't know, agriculture, every time you're going to go into a new market, and it's of course not impossible but difficult, you're going to have to start everything from scratch, building out the capital expenses, the capital investment, infrastructure, and so on and so forth. So that's, again, a reason not to go into a foreign market. So my job is basically to talk you out of doing business in foreign market, it feels like. But now, let's go further and let's get there. How to choose the right country. Okay, let's say you decided, right, that you want to go into a new country or go internationally. The short answer here is you will never be very sure. It's about kind of trying to figure out and test quickly instead of doing a lot of research and so on and so forth. The most important signal for you to look at, assuming you're not a market leader, you're not an established company that is kind of dominant and that other companies follow, and you will, I hope you get there at one point in your career, it's very possible, but assuming that you're looking up to other competitors, other people that are doing stuff faster and they're bigger and they're more advanced, look for where those competitors, those people, are doing business in foreign markets. They have done all the research, they have done all the hard steps, they're the pioneers, the first movers, right? It simply makes sense that you copy what your competition is doing, right? Simple as that. Second is, if you do decide to go into a new country, and if maybe that country is somewhere where your competition is not super active, maybe you're the first one to go there, check if the infrastructure exists. What I mean by infrastructure, fairly simple. So let's make a kind of analogy with the consumer lending business. So in my lending business, I want to make sure that we can give out money to customers without having a physical signature on a piece of paper, right? It might be a surprise, but in many countries, developing world, you still need a physical signature on a piece of paper to have a contractual obligation, you know, where the client needs to give you the money back, right? So that's an infrastructure, you know, element. I will look for countries where I don't have to have this, you know, physical signature. I'll try to look for countries where I can verify the customer and make a signature online, yes, as a simple example. So this is infrastructure that you need to check. Next one, look for markets with minimum entry barriers. So this is, again, a common sense thing. Especially if you're doing it for the first time, you want to make sure you do it cheaply and quickly. Whether it fails or not, it's a bit outside of your ability to decide. You just have to do your best and therefore try to focus on something that's cheap and quick. So, for example, if you need to go into a market where you need a partnership, one. Second, if you need to go into a market where you need some license that costs a lot of money and you need to put up paid capital and things like that, or you're going to a market that is very far away and traveling there alone in economy costs like 2,000 euros, those are all barriers to entry into a foreign market. Yeah? So think about something that's cheap and quick. And the last point is, like I say, you never know, you have to sleep with your partner to really get the feel. It's the same with new countries, with doing business internationally. The idea is you have to start, and then from there you will start learning, understanding, etc. No amount of planning, research can kind of replace the actual step of, you know, doing it quickly, cheaply, and then learning from there. Next question is how to fund your expansion. Like I mentioned in the beginning, so ideally, who of you here have a business that generates profit? Okay, excellent. So perfect. So actually, you might be in that position. So ideally, you want to have a business that's established. It makes money. You could afford to take some of that money out in dividends, but you do not do that. You choose to invest it into growing a new country. That's a fantastic scenario, right? When I started, I didn't have that scenario. I had like 3 people somewhere in the outskirts in Riga, and we had to raise money from investors. So that's why I'm saying, really, in most cases, you'll have to raise money from outside investors. And so in a perfect world, you have your business that's established, it makes money, you have researched countries, you have figured out, okay, this is a good country to go into, not a lot of barriers, there's maybe a competitor or two that is already doing something, so all the signals are there that it might be successful. That's a perfect pitch to go to an investor, whether a VC or a private investor, right? There's no other better pitch for an investor to give you money than that kind of a story. What I have done a lot, and that's my kind of growth hack, people like growth hacks, is instead of raising a lot of money, let's say, I don't know, 2, 3, 5, whatever is a lot, 10 million from professional investors for your holding company or for your main business, and then use some of that money to go into a new country, and that process can take 12, 24 months at least, because of my impatience, rather than as a smart strategy, rather than just I was like very impatient. I would look for a couple 100,000, 100, 200, 300,000 from a private investor to say, okay, let's go into that separate country, let's say Poland. I'll give you not 5, 10%, I'll give you 20, 30, 40%, or once we even gave 51%, which was super stupid. And you give a bigger stake for a smaller amount of money, but you do that quicker, and that gives you the ability to test out the market quickly. Instead of doing analysis, planning, raising a lot of money, and then you go into this country and you realize you're shitting your pants because it hasn't worked out. So that's like a side scenario to try to open 1 or 2 countries quickly and learn. And if they are successful, you can buy out that investor, yes? And then all of a sudden you've tested the market quickly, you tell your investor, okay, now I'm going to buy you out. Ideally, you work those conditions of buyouts, etc., in your shareholders agreement, but that's a whole separate story. But effectively, that's a way to grow into new countries. All right, how to hire local management. So if there's any one message I want to take away from this, that you should kind of like remember, all the rest of it doesn't really matter, is that you want to have a country manager, you want to have, maybe it's a local partner, I would call them normally country managers, managing directors. When you go into a new country, you want to have a person that builds everything for you in that country. You don't want to do it yourself. That is the key message here. That's what I've learned from building like number of countries, number of different businesses over the years. As an example, with Czech Republic. Czech Republic was our first business internationally outside of Latvia. We started in Latvia in about 2011, small kind of side business that we would do on the weekends and evenings. And then 2012, we kind of figured out this can be a thing, and for various reasons, we had to go out into foreign markets fairly quickly. So we decided, okay, let's go into Czech Republic. The way we did it is I did everything myself, literally. I would call up lawyers, I would go to the bank with my business partner ourselves, talking with them in their broken English that we want to open a bank account, establish an LLC. We would look for offices ourselves with brokers. Then we would invite people for interviews. We would post job ads ourselves in the local job search websites. And it felt exciting and cool, and it's a startup and all of that, but it was just a fucking waste of time. And I realized that pretty quickly, right? Because I was hitting these language barriers, culture, just like, trying to do everything myself. Next time we did it in Poland, the first thing I did, I hired a country manager. I didn't call him a country manager then, I called him, I guess, business development manager or something. And that person did basically all of that work for me and more. At the end of the day, the success of you going into a foreign market relies, roughly speaking, hypothetically speaking, 50% on your country manager, and 50% depends on the execution and whether you've picked the right country. Yes? Fundamentally, it's fairly simple. So how do you get the right country manager? Nowadays, I use headhunters, specialized search firms that are specialized in looking for executives from companies that are already big, successful, and they talk to these executives and they bring them to the interview table, and then I have the opportunity to have a short list of super qualified, motivated people, right, that I have to pay a lot. If you're in a position where you can afford to work with search firms, do that. Be ready that it will cost you up to 5 times monthly gross salary. So let's say your gross salary budget, for example, for simplicity, is 10,000 euros per month. So you should expect to be paying 30 to 50,000 euros for hiring the country manager. And that's for that budget. If you're hiring for somebody that's more expensive, this can go into 100,000 plus, which seems like a bit insane, a bit ridiculous, but if you think about it, the most expensive thing that you can do is go into a new country, get a bad country manager that you have to change and they're not executing, etc., etc. That's going to cost you far more, right? So you have to think about in those terms. Yeah, and then if you don't use a search firm, what you can do, and what I've done for some new projects still myself, is you go on LinkedIn, you look for companies that you admire, that are in your space, that are good, and look for executives from those companies, and you write them directly. You say you're launching shortly in that new country, you need a CEO, you're giving shares, etc. You can also make up bullshit, of course, right? Just to get the audience and get people to reply. And don't outsource that to your junior assistant. That's in terms of how to approach these people yourself. And then the last point is to give a task instead of like an interview to see if the candidate is really good. But what you have to appreciate and expect is you're probably not a super well-known company, right? You're not established and big, especially in the foreign market. So expect that nobody wants to fucking work for you. These stories of how do you pick the best candidate on all of that is nonsense. It's the question of how do you get anybody to come to the interview and actually show up to work the next day, right? In Prague, in Czech Republic, when we started, we literally had this complete nightmare. We would hire people, they would understand that we're like two fucking idiots from Riga, and then 2 days later they don't show up, and they don't even send a message. And this was like a constant thing for like the first year. So expect to be not getting the best possible candidates and talent to come work for your company, but with search firms, with like focused search, you can still get those people. And when you do, ask them simple things like an actual presentation of a business case. So let's say, how do you find the first 10, 100, or 1,000 customers, whether you're B2B, B2C, I don't know, and get them to present you a 5-slide presentation. Okay, when we're starting, okay, who you're going to approach, what sales channels are you going to do, how you're going to set this up. And that's a far better interview question than many others, right? So give business case kind of questions to see if your candidates are any good. How to test the market. So the shortcut I would suggest is before you establish an infrastructure, open bank accounts, get your LLC running, get lawyers and hiring a country manager, if your business is tech-enabled or if it can rely on online tools, set up a website in that language of the country you've chosen and pretend that you already have a business. Try to buy ads and get traffic to that website, and instead of selling the product or service, have traffic to sign up to your waiting list, yes? And that will give you far more insights about your potential in that country than, again, trying to do research and setting everything up before these growth hack test approaches. So that's one way to go about it. Next one, which I do, again, recommend is you search for a country manager. And in the interviews, you ask for questions about that chosen market. And that is one of the best ways to research the market. Sometimes I have no intention of hiring anybody, but I'm paying for a search firm to get me candidates to speak about the market or to speak about a specific product or even about a specific competitor, and that gives you all the insights in the world, right? And you can play these games as long as you're aggressive and creative. And the last point is when you actually become a client of your competitor. So let's say there is a country you've chosen, there is some, one great company that you think is doing well, register, become a client, pay them some money and get engaged in their sales and client process. That gives you exposure to their agreements and agreements with the customers, so you don't have to pay money for lawyers to have your agreements in place. It gives you an idea of how their processes work, how they sell, where they place ads, and things like that. So there's a bunch of things you can just simply copy from your competitors simply by being a client. The next one is working with different cultures. So the cultural difference is a real thing, and the more you respect it rather than ignore it, the more effective you can be with dealing with business environments in different countries. I'd say from my experience, the most difficult cultural gap that I've had is dealing with the Middle East. I've had businesses, and I still have, in Mexico and other places outside of Europe. And you might think that, within Europe, there's no cultural differences, but of course there are. If you go to Spain, they have, a certain view of how to do things versus Eastern Europe or the Baltics. My experience with the Middle East has been difficult in that cultural kind of gap, in that in the Middle East, people value personal relationships far more than they value transactional relationships. So for us Eastern Europeans, or let's say Europeans generally, or Westerners, it is normal to get a meeting online with a person you don't know, agree to meet in a conference room, make a deal, and then off you run and you have a business relationship, right? In the Middle East, it mostly happens through personal relationships, over dinner tables, over connections, over personal people that they know, and that's how things get done, right? And it's a different vibe. And so if you don't take this into account, you're just going to be far less successful. So therefore, my approach to mitigate this cultural gap is, when it comes to hiring the country manager and people that work for the country manager, is to look for people that have international experience. Fairly simple. So your country manager should have experience of having worked abroad or having studied abroad, right? Universities, international universities, if they have that in a CV, if they have worked in a company that's foreign or have reported to people that are outside of their country in an English language, those are all signals that this person is going to be, capable of dealing with international teams. All right, and the last few points are common sense, constant trips to the country and back and forth, and that's what I'm saying. You really spend time on airports and hotels, especially as a founder, especially as a small size company. You just have to do this yourself. You have to go to the country that you've chosen to do business in. I'm sure you understand this. No Zoom meetings, no online stuff can replace being in a different country, getting the feeling, etc. So that's just common sense. Last point is kind of like maybe less obvious, is people oftentimes assume that everybody knows or understands what it is that you're doing, right? Because you're doing it on a daily basis, the terminologies, the concepts, the ideas, etc. It all seems common sense to you. For people outside of your business, like, they don't know. So here, what makes sense is you list your values, and I don't mean some cultural stuff, just list things that are important. Let's say, in my experience, in my case, I value speed over quality. Right? A simple concept. And I value direct communication, fairly straightforward communication in business. And that's a fairly common thing for Eastern Europeans, right? And I also didn't kind of appreciate it until I started working with people in Spain, for example, that like things far more indirectly, or with people in the Middle East. Saying things kind of straightforward is not really sometimes appropriate, yeah? So listing those things to communicate them to the country manager, to the team that you're building, is far more effective than assuming that they're going to understand it, they're going to get it, they're going to read it from you. How to keep your shit safe. All right, so let's assume, and let's say you get to this successful, fortunate position that you have a business that you've built in a foreign country and that it becomes valuable. It generates millions or hundreds of thousands, whatever, in profits, revenue, and there is a thing that you've built. This will attract some people that might be working for you, most likely the ones that are working for you, to take advantage of this fact that you have built a business, something valuable. And maybe this attracts the attention from people because you might not be in that country on a regular basis. It's not your HQ. You go there kind of, the bigger it gets and the more successful it gets, the less you go there. And people will start thinking that actually they kind of built it for you and they could maybe take some shit away from you and steal something. So I've had experiences quite a lot, it's a whole different topic, of people taking or stealing client databases, client portfolios, key people from our team, IT code, and things like that, right? So you have to think about this, and one of the ways, a simple way, and it's not to say that you want to create a dictatorship where you kind of like, everybody's afraid of you or something. It's more to say that you want to build an organization where if people want to do something bad, your organization doesn't fall apart and you're not exposed to massive risks so that you can still continue operating. So some of the things to do is, let's say with your IT, whoever develops your IT should be sitting in your HQ rather than in the country that you're going to. Decision making, especially around costs, that let's say in the new market that you've opened up, let's say there's some advertising budget, tens of thousands, hundreds of thousands, millions, whatever it is. And the local country people will be deciding most of the cases for this marketing spend because they're experts rather than somebody from the other side of the world. You have to make sure that there's a process in place where the HQ people, one person, or maybe if it's a bigger business, more people, are validating and making sure these spend decisions are double-checked and verified, because that's a way of how money flows very easily into the pockets of the people that shouldn't get it. And same for intellectual property. You want to have your patents, your domain names, etc., registered in your HQ, monitored by your lawyer, and things like that. And the last point is kind of a jokingly, but we've had this also, is send somebody from your HQ to that new country as you have built the business out to live there weeks or months in a row, or even move there, and have that person report to you informally, so that nobody knows that, about what's happening in the office. What's the background of the people that are getting hired? What's the country manager doing? And things like that. So have this informal rat spy report to you to make sure your empire is safe. This is the last point. Notes on emerging markets. So this is relevant for when you're going outside of Europe into places like Latin America, Southeast Asia, Africa. Big markets. It seems very tempting and exciting, 100 million plus population, etc. But they can be very dangerous in ways that you don't really kind of understand unless you've dealt with these risks. So first thing is keep your shit safe kind of mindset, right? Especially if you have businesses that are far away. The control element, it becomes more and more important. The second thing, which is kind of less obvious, but it is a real thing, trust me, is currency risk. You understand what's a currency risk? Okay, I will explain very quickly. If you, let's say, start a business in Latin America, in Argentina, and you make money in pesos. If you know anything about Argentina, the peso goes up and down against the euro and the dollar like every time. So you invest a lot of money, and all of a sudden peso goes down, you instantly have hundreds of thousands or millions in a loss in one day. Yeah, and that can wipe out your business in one day. So a way to avoid that, there's a number of ways, but not to go into too much complex stuff, you can just look for countries where the currency risk is not that active, right? If it's a non-euro currency, just see if over the last 10 years there have been some ups and downs, and don't go into countries that are risky there. Last few points, getting money out of the country. So emerging markets are advertising, come invest in our business, we'll help you with tax breaks, etc., etc. Once you make money and you want to pay yourself dividends, or you want to just literally withdraw cash from that country, you want to convert from the local shitty fucking peso or whatever it is to euro, to the strong euro, all of a sudden banks will start asking you questions. You have maybe all of a sudden tax reasons why you cannot receive this money. There's all sorts of things that can happen. So make sure that you talk to tax advisors and lawyers to see if expropriation of money or withdrawing money, getting back out to Europe can be a problem or not, right? Okay, that's that. And the last one, political social crisis. I mean, we live on the verge here in Europe next to Russia-Ukraine war, so this probably makes sense to you. I have an investment in Ukraine, and so obviously that's something that nobody can control, what happens. What my kind of experience of losing businesses, for example, in Georgia, all of a sudden one day the government said, okay, look, we're cutting the interest rate at which you can lend to consumers, and by the way, we're going to buy your loan portfolios at a big discount. If you don't want to do it, we're going to send you tax audits. So that was a message for them that you need to fuck off and sell everything you have for nothing. And that happens, obviously, like in many places. So a way to avoid that is not to necessarily not go into countries where this can happen, but to make sure you build a business so that you start cashing out from that foreign market in your own pocket as soon as possible, instead of kind of postponing that cash out event for 5-10 years, right? Just make sure you make the money return off your investment and on your investment as soon as possible. And then you're safe if something bad happens and you no longer have the business. Nelson Mandela, I put this on the slides. I used to talk about fundraising, and I used to say this quote that he had, which was, it always seems impossible until it's done. So it's a bit similar to new countries, to opening a business internationally. It seems like, how is it possible? How can you operate in foreign markets and hire people and all of this? But like I said, small, quick tests. Look for a country manager, do interviews, look for places that are cheap and quick, and then next thing you know, you're going to have a business that is international. If you liked it, subscribe, comment, share.